This is Bloomberg Crypto, a daily Bloomberg iHeart podcast, and I'm Stacey Marie Ishmael, managing editor of crypto for Bloomberg News. It's Wednesday, September 7th. Singapore was an early proponent of crypto regulation, attempting to establish itself as a hub for global digital asset companies long before similar pronouncements by countries like the UK. And for a while, it seemed to work. And then 2022 happened. A year of high-profile crypto company failures and market meltdowns. Several of the biggest casualties of the chill of this current crypto winter operated out of Singapore. It was a base for 3 Arrows Capital, the disgraced crypto hedge fund. It was home to Vault, ZipMex, and HODLNOT, all of which have sought protection from their creditors after being unable to meet their financial obligations. These high-profile collapses have shone a harsh light on Singapore's regulatory framework. So what's next for crypto in Singapore? For more, I'm joined by Bloomberg reporters Joanna Ossinger and Suvashree Ghosh. In this recent, as we're calling it on the show and everywhere else, crypto winter, Singapore has really emerged as one of the jurisdictions where things do not seem to have gone quite according to plan, either for the cryptocurrency companies that were operating in the region or for the regulators responsible for those companies themselves. Joanna, just to start with you, how long has Singapore had some kind of regulatory framework for crypto, and what's been going on with that recently?
They actually got started in 2016, 2017, looking at blockchain. And so they've been looking at the edges of it, looking at the technology for quite a while, much earlier than a lot of jurisdictions. And a couple years ago, they decided they wanted to do this licensing framework for it. And that has been something that's gotten a lot of applicants, a lot of interest. The approvals have gone a little more slowly than some people may have thought they would, but there is still a premium about being regulated by Singapore, which is seen generally as a government that is pretty forward-thinking.
Who have been the major companies in Singapore that are operating in and around crypto, and what's been going on there over the past few months?
The biggest shock has come from Singapore in the sense that, the huge crypto hedge fund, which is one of the biggest, the largest one actually globally, 3 Arrows Capital, they had to file bankruptcy. And that was one of the biggest event that Singapore saw in the last few months.
So you mentioned 3 Arrows Capital, and you mentioned that they were at their peak, where they are no longer. They were one of the largest, if not the largest, crypto hedge fund in the world. There are a lot of people right now who are looking at their accounting with a degree of skepticism about the assets that they had under management. But they started off in Singapore, but then they left Singapore in September of 2021, before all of this stuff started going down.
So did the collapse of 3 Arrows really cause or lead to potentially the broader crypto contagion?
So, Joanna, what was the failure here as it related to how they were regulated in Singapore before they re-domiciled in the British Virgin Islands?
They were able to kind of get the respectability. They were able to get a lot of connections here in Singapore, a lot of high net worth people, and they were able to kind of establish this groundwork that led to them being very well connected, getting a lot of loans, and kind of integrating themselves into the crypto ecosystem. If there was anything, it's probably that Singapore looks at specific things. 3 Arrows did have a license to manage some money, but it was, say, a max of $250 million, and they weren't supposed to go over that. And that might have been part of the reason that they left. But there are things that Singapore looks at and things it doesn't necessarily look at. And so some of the things it doesn't necessarily look at may have been some of the things that got 3 Arrows in trouble.
And Suva, you have been reporting on some of the things that they do and don't necessarily look at as it relates to a couple of other companies. Can you share a little bit more about what that reporting has been?
There are like tons, as you rightly say, right? The Vault, ZipMex, HODLNOT, all three, we have seen in quick succession how they have, completely had to blew off, right? Really. I mean, because you see, suddenly one fine morning, we get information that Vault had to stop their withdrawals. And then again, the same thing happened with ZipMex, which is all over the Southeast Asia, and then HODLNOT, which actually had a license from the Singapore Central Bank, So that shows that, how interconnected this part of the world is. They lent, they borrowed, they lent, and they leveraged. So eventually what happened was, my loan gets bad, then the other person who also borrowed from me have to suffer from the same event. So that's what happened in this case for all these companies in Singapore.
And Suva, to that point about what shall we describe as like the turmoil that's currently affecting the crypto industry in Singapore, you've both been reporting on the fact that the various regulatory agencies there are considering taking additional steps in response. And one of the areas that Ravi Menon, for example, who is the head of the central bank there, is talking about is additional protections for retail investors.
MAS has said it wants to attract leading crypto players to Singapore. On the other hand, MAS has a stringent and lengthy licensing process for those who want to carry out crypto-related services in Singapore. And MAS has also been issuing strong warnings against retail investments in cryptocurrencies, and has been taking increasingly stronger measures to restrict retail access to cryptocurrencies.
What's the response been to some of those proposals? Like, are folks like, great, this sounds like it's going far enough, or are there additional things that people want to see?
Retail investors will not like a very strict regulation where they will be told what to do and what not to do, which is more than what to do in terms of crypto investments. So yes, it is likely to be an unpopular one, but of course, it's for the safety and security of investors, of people like you and me. So it's eventually intended to be actually for a better outcome for retail investors.
And one of the things, in as much as they're starting to gather that information now, slightly later than some folks might have really preferred, but they don't currently hold the companies that they license subject to things like limits on liquidity risk, or, requiring them to safeguard customer assets and make sure they're in sort of separate bits of the business that are less exposed to some of those market challenges. Are those kinds of additional changes also being discussed by regulators, or are we still in the we have to wait and see what they're eventually going to come out with phase?
It does seem like they're looking at that sort of thing, and it's still wait and see. They're still developing things. But if you look at what happened with the trouble in crypto in the past few months, it seems like that would be something regulators would be interested in. Those questions from their spreadsheets are certainly looking like they may at least be interested in it.
Coming up, you'll hear more from reporters Joanna Ossinger and Suvashree Ghosh discussing everything to do with regulation and crypto in Singapore. We'll be right back. So if I'm hearing you correctly, the sort of extremes are that in India, on the one hand, there isn't actually a regulatory framework. There's a tax framework that's kind of acting as a proxy for more formal regulation. In Singapore, on the other end, where especially right now, it looks like they're trying to tighten things up that might have been missing before. And then in the middle, you've got Dubai, where there are some rules, there's some policy, but they seem to be taking a much more explicit, hey, come do business with us kind of approach. Joanna, on things that we've seen and things we're reporting on here at Bloomberg around what happened in Korea, for example, in the aftermath of Terra, Korea, much like Singapore, was one of those jurisdictions that was perceived as pretty sophisticated. It had pretty good guidelines and interest in blockchain and crypto companies that led to a lot of retail and consumer interest. There was a lot of activity that was happening over there that's now going through a reckoning in the aftermath of the collapse of Luna and Terra. people were very upset, are very upset with Do Kwon, who was the founder of these entities. Are you seeing any parallels in Singapore to that kind of public anger that we're witnessing in Korea? Or is this a very different conversation?
It feels somewhat different. The Monetary Authority of Singapore has been reminding people all the time about the dangers of crypto.
In a speech on Tuesday, the Deputy Prime Minister said the crypto space is a highly risky area and investors have suffered losses or even lost their life savings in the
And it feels like most of the people here who might have lost money would have been more along the lines of high net worth people or people who had some sense of the risks that they were taking with it. And I'm sure there were probably some people who lost money that they couldn't afford to lose, but there is not so much a public uprising. And of course, that doesn't necessarily happen as much in Singapore anyway, but it is more, they just don't want the public to invest in crypto, but it's more of an academic discussion of how to handle it, as opposed to, say, the public anger or anecdotes about things happening to the average person on the street.
That's helpful context. And Suva, just a sweepy question for you as someone who recently moved to Singapore. What do you think have been some of the biggest differences in reporting on things like crypto and fintech in a jurisdiction like Singapore as opposed to some of these other places that you've been covering?
I think, the biggest difference is, again, regulation, right? I've covered India in my previous role in terms of fintech and also crypto. And I think the way we used to look at that particular regulatory regime is, let it grow. And there is no idea or no clarity about how to regulate the system. So it's really like, nobody's baby there in India. However, when we move to this part of the world, which is, Singapore, which is a little more regulated, not little, actually, I would say a lot more regulated than compared to India, also a lot more organized. So in that sense, yes, there is a first mover advantage or one of the early movers advantage for Singapore compared to India. However, I would also like to add, apart from Singapore, there is other countries in this region, like China. You saw how they completely banned crypto. And then Japan, interestingly, is slowly warming up to crypto now. So there is a lot of, different style and approach to this entire sector when you look at now and when you look at maybe 2 years prior. Yeah, so that's how it is. It's not uniform across.
Thank you, Joanna, and thank you, Suva.
Thank you.
Thank you for having us here.
You can find more of Joanna's and Suva's reporting on the Bloomberg terminal on Bloomberg.com or follow them on Twitter. Joanna is at Ossinger J, that's OSSINGERJ, and Suva is at Suvajourno, that's SUVAJOURNO. This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net, or find us on Twitter, we're @crypto. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producer is Mohammed Farouk. Associate producer is Moses Andam. Blake Maples is our engineer. Original music by Leo Sidran. I'm Stacey Marie Ishmael. We'll be back tomorrow.